What is happening, crypto fam? Get ready for a rapid-fire update that you absolutely cannot miss. The market is moving at lightning speed, and we've got the inside scoop on the developments that are set to shake things up. From major price predictions to groundbreaking ecosystem shifts, this episode is packed with the essential intelligence you need to stay ahead. Don't blink, because the next big move is happening right now, and we're breaking it all down for you. We're diving deep into the forces driving the current market, exploring the potential for massive growth, and uncovering the strategies that could define the next era of digital assets. Prepare for an information surge as we bring you the most critical news straight from the front lines. Make sure you're locked in, because this is where you get the edge. Let's go. First up, the big players are talking, and the predictions are bold. We're seeing analysts weigh in with some serious numbers, suggesting that a major bull run isn't just possible, it's expected. What's behind this optimism? We've got the key indicators and the expert insights that point towards continued upward momentum. Get ready to hear about the forces that could propel digital assets to new heights and understand why this week could be a pivotal moment. Next, we're shifting gears to explore a fascinating evolution that could redefine an entire ecosystem. Imagine a new standard emerging, built on a foundation you already know, but with capabilities that open up entirely new frontiers. This development has the potential to unlock unprecedented growth and utility, creating unique entry points for investors and innovators alike. We'll unpack what this means for the future and how it could reshape the landscape. Then, we're looking at the underlying strength of the market, even when the price tag tells a different story. Discover how a key on-chain metric is hitting record highs, signaling deep investor conviction and a robust economic backbone. This is the kind of data that tells the real story of resilience and long-term value. We'll explore what this means for stability and growth in the current climate. And finally, prepare for a mind-bending prediction that could see a major altcoin skyrocket to unbelievable levels. We're talking about a potential controlled launch, driven by strategic moves within the traditional financial system. Could this be the catalyst for a massive revaluation? We've got the analysis that breaks down the possibilities and the factors at play. Stay with us for all the details. Don't forget to smash that like button, subscribe to Bitcoin Bulletin, and ring that notification bell so you never miss an update. The bull run is back on. Despite a recent dip, market analysts are signaling that the upward trend for digital assets is poised to continue. This optimism is fueled by a confluence of factors, including strong institutional interest and evolving market dynamics. Several key forces are shaping the current landscape, according to Ryan Lee of BitGet. While Bitcoin-based exchange-traded funds saw outflows totaling $523.3 million last week, on-chain data reveals a declining trend in exchange reserves. This reduction in available supply on exchanges typically signals a slowdown in selling pressure and a potential precursor to a market recovery. Lee highlights that institutional inflows remain the primary catalyst for market growth. He suggests that a combination of favorable liquidity conditions and ongoing product innovation could set the stage for further gains in the broader crypto markets. The anticipation of a potential interest rate cut by the Federal Reserve in September is also playing a crucial role. This expectation is boosting overall risk appetite among investors, creating a more supportive environment for riskier assets like digital currencies. Lee projects that Bitcoin could trade within the $105,000 to $115,000 range this week, with Ethereum potentially moving between $4,000 and $4,700. Alexander Parisichin, CEO of TCHNOBIT, points to a significant shift in investor focus towards altcoins, with a particular emphasis on Ethereum. Ethereum has managed to maintain its position above the $4,500 mark, and investment products tied to it, such as spot exchange-traded funds, are consistently attracting inflows. In fact, over the past week, Ether-focused investment products saw inflows exceeding $1 billion. Parisichin forecasts that if this trend continues, altcoins could emerge as the primary driving force for the crypto market in the coming months. This rotation into altcoins suggests a broadening of the market rally beyond Bitcoin. The market sentiment appears to be one of anticipation rather than overheating. The trader known as Don Crypto observed that the market experienced a brief period of overheating in July when Bitcoin first surpassed $120,000. Currently, there is a noticeable lack of excessive speculation, with most market participants adopting a wait-and-see approach, expecting the next significant price movement. This indicates a more measured and sustainable growth pattern compared to previous speculative bubbles. Furthermore, the analyst identified as Gordon emphasizes that Bitcoin is on the cusp of a significant technical event, a golden cross. This pattern, formed when a cryptocurrency's short-term moving average crosses above its long-term moving average, is often seen as a strong bullish signal. Simultaneously, altcoins have reached historically oversold levels, suggesting that a substantial rebound could be imminent. This confluence of technical indicators for both Bitcoin and altcoins points towards a potentially strong market recovery. Traditionally, September has been a challenging month for Bitcoin, often marked by negative returns. Analyst Tom Tucker noted that August followed this seasonal pattern, with Bitcoin experiencing a decline of approximately 6.5% over the month. However, Tucker also pointed out that this year's August performance was relatively stronger compared to the previous 4 Augusts. He stressed the importance of Bitcoin holding the $100,000 support level to trigger a robust recovery in the fourth quarter. At the time of reporting, Bitcoin was trading around $109,143, indicating it was actively testing this key support zone. Previously, analysts had identified a death cross on Bitcoin's chart, a bearish technical indicator. However, the current sentiment, supported by on-chain data and analyst predictions, suggests that the market may be overcoming these bearish signals and is poised for a renewed advance, especially if the critical $100,000 support level holds firm. Hold on tight, because the next development could completely change the game for digital currencies. We're about to explore a new standard emerging from a familiar foundation, potentially unlocking massive growth. A new era for Bitcoin's ecosystem. An innovative development known as BRC-2.0 is emerging, promising to establish a robust DeFi ecosystem directly on the Bitcoin network. This signifies a unique entry point for Bitcoin's next significant growth phase, expanding its utility beyond just a store of value. The advent of BRC-2.0 represents a potentially transformative moment for the Bitcoin network. While Bitcoin has historically been recognized primarily as a digital store of value, similar to digital gold, the development of new protocols and standards aims to unlock its potential for a much broader range of applications, particularly within the decentralized finance, DeFi space. BRC-2.0 is conceptualized as an evolution of the BRC-20 standard, which itself was an experimental token standard on the Bitcoin blockchain using the Ordinals protocol. The limitations of the original BRC-20 standard, such as its inefficiency and high transaction fees during periods of network congestion, have spurred the development of BRC-2.0. BRC-2.0 aims to address these shortcomings by introducing enhanced functionalities and improved efficiency. While specific technical details of BRC-2.0 are still emerging, the underlying goal is to create a more scalable and versatile framework for building decentralized applications and financial products directly on Bitcoin. This could include features like more sophisticated smart contract capabilities, improved tokenization standards, and more efficient transaction processing. The objective is to make Bitcoin a more competitive platform for DeFi development, attracting developers and users who are currently more active on other blockchain networks like Ethereum. The emergence of a Bitcoin-based DeFi ecosystem is significant because it taps into Bitcoin's massive network effect, security, and established brand recognition. By building DeFi applications on top of Bitcoin, developers can leverage these inherent strengths. This could lead to a diversification of Bitcoin's use cases, potentially increasing its adoption and value proposition. For instance, it could enable the creation of decentralized exchanges, lending protocols, and stablecoins that are native to the Bitcoin network, offering new financial opportunities for Bitcoin holders. This development is seen as a unique entry point for Bitcoin's next growth phase. Traditionally, DeFi innovation has been concentrated on other blockchains due to their more flexible smart contract capabilities. However, if BRC 2.0 successfully delivers on its promise of enabling a functional and efficient DeFi ecosystem on Bitcoin, it could attract a substantial amount of capital and innovation to the Bitcoin network. This would not only benefit Bitcoin itself, but also the broader cryptocurrency market by demonstrating the adaptability and potential of blockchain technology. The implications for the market are substantial. A thriving Bitcoin-based DeFi ecosystem could lead to increased demand for the Bitcoin network's resources, potentially driving up transaction fees and encouraging further development of the network's scalability solutions, such as the Lightning Network. It also presents an opportunity for investors to gain exposure to DeFi through the perceived stability and security of Bitcoin. The success of BRC 2.0 could mark a paradigm shift, positioning Bitcoin as a foundational layer not just for digital value storage, but also for a new generation of decentralized financial services. Audience impact. This evolution is sparking considerable discussion about Bitcoin's future utility and its potential to compete in the DeFi space, with many seeing it as a crucial step towards broader adoption. But what happens when the underlying strength is masked by a falling price tag? We're about to uncover a metric hitting all-time highs, signaling incredible investor confidence. Resilience amidst volatility. Bitcoin's economic backbone strengthens. Even as Bitcoin's spot price experiences a downturn, its realized capitalization has surged to unprecedented levels, underscoring a profound level of investor conviction and a strengthening economic foundation for the cryptocurrency. Bitcoin's realized capitalization, a key on-chain metric that values coins at the price they were last moved, has reached a new all-time high of $1.05 trillion. This remarkable achievement comes despite a notable drop of around 12% in Bitcoin's spot price, from its peak of nearly $124,000. The distinction between market capitalization and realized capitalization is crucial here. While market capitalization fluctuates directly with the spot price, pricing every coin at the current market value, realized capitalization only adjusts when coins are transacted and thus repriced on the blockchain. This makes realized capitalization a more robust indicator of the true value committed to the network and the depth of investor holding. The significance of this trend lies in its demonstration of investor resilience. Dormant holdings, long-term holders, and even lost coins act as stabilizers within the realized capitalization model. These segments of coin holders are less likely to sell during price dips, thus preventing large drawdowns in the metric. This contrasts sharply with previous market cycles. During the bear markets of 2014-15 and 2018, realized capitalization experienced steeper declines, falling by as much as 20%. Even in the more recent 2022 downturn, the metric saw a drawdown of nearly 18%. The current cycle, however, shows realized capitalization increasing despite a double-digit price correction, indicating a far more stable and resilient underlying investor base. This divergence between spot price action and realized capitalization highlights a fundamental shift in market behavior. It suggests that a larger proportion of Bitcoin holders are demonstrating strong conviction, choosing to hold onto their assets rather than capitulate during price corrections. This behavior is often associated with a maturing market, where investors have greater confidence in the long-term prospects of the asset. The metric effectively filters out speculative trading and focuses on the enduring value proposition of Bitcoin as perceived by its holders. Glassnode Data, a prominent blockchain analytics firm, provides the source for these figures, reinforcing the reliability of the analysis. The continued ascent of realized capitalization, even as the spot price falters, sends a powerful message about the health of Bitcoin's economic backbone. It implies that the capital invested in Bitcoin is not merely speculative, but is deeply embedded within the network, held by conviction investors who are weathering short-term volatility. This resilience can be attributed to several factors, including increased institutional adoption, growing regulatory clarity in some jurisdictions, and the ongoing development of the Bitcoin ecosystem, such as the Lightning Network and ordinals. These developments contribute to a more robust narrative for Bitcoin, moving beyond its initial perception as purely a speculative asset. Audience impact. The data is fueling discussions about Bitcoin's intrinsic value and its ability to withstand market fluctuations, with many interpreting the rising realized cap as a strong signal of long-term bullish sentiment. Now, prepare for a prediction that could see a major altcoin experience an astronomical surge. We're diving into the potential for a controlled launch fueled by a strategic financial play. XRP poised for 50 controlled launch via national banking license, predicts top Bitcoin investor. A prominent Bitcoin investor, known by the pseudonym Pumpius, has outlined a compelling case for XRP potentially reaching $50. This ambitious target is predicated not on speculation, but on what he terms a controlled launch into the U.S. financial system, driven by Ripple's pursuit of a national banking license. Pumpius's thesis hinges on Ripple's application for a national bank charter with the U.S. Office of the Comptroller of the Currency, OCC. This license is the same regulatory approval held by established financial giants such as J.P. Morgan, Citi, and BNY Mellon. Securing this charter would fundamentally alter Ripple's perception, elevating it from a fintech innovator to an entity operating on par with the largest traditional financial institutions. For XRP holders, this signifies a potential integration of XRP as the foundational settlement asset within Ripple's banking operations. The application process is already in motion, with Ripple having submitted its filing in July. The OCC typically adheres to a 120-day review period, suggesting a potential decision as early as October. The timing of this decision is critical for investors. A favorable ruling would not only legitimize Ripple's business model, but also position XRP as a regulated settlement asset, deeply embedded within the core infrastructure of the U.S. banking system. This regulatory clarity is seen as a prerequisite for widespread institutional adoption. Pumpius argues that the true catalyst for XRP's valuation lies in the capabilities unlocked by the OCC charter. Such a license would grant Ripple direct access to the Federal Reserve's payment systems. It would also empower Ripple to custody tokenized assets, issue stablecoins, and facilitate the settlement of securities. Crucially, this would eliminate Ripple's reliance on intermediaries, allowing it to serve as a direct bridge for banks, brokers, and investment funds transitioning into the realm of tokenized finance. In this scenario, XRP becomes an indispensable component, with every major institution utilizing Ripple's infrastructure requiring XRP for cross-border liquidity and inter-asset settlements. It would transition from a speculative token to a vital functional utility asset for the global financial elite. The potential economic impact is staggering. Global bank settlements currently involve approximately $6.6 trillion daily. Pumpius suggests that even capturing a small fraction of this market through Ripple's system could lead to an enormous increase in XRP's price. Given XRP's fixed supply, increased institutional demand would create significant upward price pressure, far exceeding what retail speculation alone could generate. At present trading near $2.72, XRP could potentially reach $50 if even a modest portion of global liquidity flows through Ripple's system. This would represent a 1,600% increase, propelling its total market capitalization to approximately $3 trillion. Such a valuation would not only surpass Bitcoin's current market value, but also fundamentally reshape the hierarchy of the cryptocurrency market. The resolution of Ripple's protracted legal battle with the U.S. Securities and Exchange Commission, SEC, is another key factor. Pumpius contends that while the lawsuit presented significant hurdles, it was a necessary process to achieve regulatory alignment. Without a definitive outcome, obtaining an OCC charter would have been exceedingly difficult. With the legal ambiguities resolved, Ripple can now focus entirely on securing the banking license, bolstered by a clean regulatory slate that enhances its credibility in Washington and among international partners. This clears the path for any new adoption initiatives by banks and funds, free from legal uncertainties. However, Ripple faces opposition from established players. The American Bankers Association and other industry groups are actively lobbying the OCC to delay or reject Ripple's application. Their primary argument revolves around the need for public debate before granting federal bank charters to crypto firms, and they express concerns that approving Ripple would allow it to circumvent state-level licensing requirements, conferring an unfair advantage. This resistance underscores the disruptive potential of Ripple's success. Pompeius characterizes XRP's potential rise not as a speculative moonshot, but as a controlled launch. This implies growth within a regulated framework, facilitated by a national bank license and direct access to the Federal Reserve, making the $50 target a logical projection rather than a fantasy. This strategic integration into traditional finance differentiates XRP from many other crypto projects reliant on hype and retail speculation. Audience impact. The prediction has ignited intense debate within the crypto community, with many viewing the potential OCC approval as a watershed moment for both Ripple and the broader digital asset landscape. That's all the critical updates for today, but we'll be back with more. Make sure you're subscribed. All right, that was a whirlwind tour of the market. Bitcoin's bull run looks set to continue with strong institutional backing. A new BRC-2.0 standard is emerging, paving the way for Bitcoin's DeFi future. Bitcoin's realized capitalization is hitting record highs, showing incredible investor resilience even as prices dip. And in a bombshell prediction, XRP could be headed for $50 through a strategic banking license. Don't miss out on any of these massive moves. Hit that like button, subscribe to Bitcoin Bulletin right now, and turn on notifications so you're always in the loop. Plus, let us know your thoughts in the comments below and follow us on all social platforms for more exclusive content.